Welcome to The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. Before we get started with the show, I want to thank our friends and sponsors over at Prime XBT, where many of our listeners have already signed up to trade by visiting the birbnest.com/PrimeXBT. Prime XBT is the most powerful trading platform offering immediate access to over 30 assets. Users may trade cryptocurrencies, Forex, commodities, stock indices, and much more, all from a single Bitcoin-settled account. Prime XBT gives experienced traders up to 100x leverage to multiply their capital while also providing users with multiple order types, low trading fees, and ultra-high liquidity to equip them with a one-of-a-kind trading experience. Registration does not require any user information, so visit the link below and start trading on Prime XBT in minutes. And now for the show. What The Nest Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto and Forex-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not: trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions.
Hey everybody, it's Crypto Birb here, and welcome to today's amazing episode of the Nest Show podcast. And I'm extremely honored to be hosting the show with having an amazing and truly inspiring guest. One more time, Big Chats. Welcome, brother. How's it going?
What's up, man? I always get embarrassed with these really nice introductions, you know. I'm just happy to be here and kind of talking to you. So I'm just a regular guy like you, man.
You're too kind, man. You're too kind. And I don't believe you're a special guy. You're a very special guy with special, unique talents. And there is no way you get away, with just not bringing a couple of very good charts later as we go and as we proceed. And not many of you perhaps may be familiar, or at least I hope many of you is familiar. Big Chats was already an amazing guest, back in April to the Nest Show podcast. And, since then there have been a lot of actual requests, from my people, from my community, to bring back chats, to put the charts on, to put his TA on technical analysis and whatnot. Because the last show we had was pretty good fun, I gotta tell you, right? I truly need to admit that. And my very first question is to you: what's good? What's changed? Since we last spoke in April.
I think we're older. Hopefully we're wiser. I'm still working on that. I think we're just further down the road. The market continues to mature. Every day that the market continues to be stable is a good day, because you want to build a stable market, a liquid market, a reliable market where you can exchange shares on the bid and the ask. You want a functioning, marketplace. And with that, guys like me and you can continue to learn and kind of offer knowledge and grow and just be part of it. So we're more mature. We're down the line. We're closer to the election. I think we'll touch on that later. I think that will be kind of a pivot point in equity markets, in crypto. So we just have more information, and we're still here. So that's a good thing.
Yeah, couldn't agree more. And, I definitely think, as long as you keep building, as long as you keep learning, and as you said, keep improving, to bring, this entire daily wisdom pieces into your, surrounding, I think that's not only what makes us, better people in general, but what makes us also better traders, pretty much.
And I want to say thank you, by the way. Let me jump in. What's new also is because of you, I registered for CMT, and I'm taking my level 1 exam in December. So
awesome.
I'm pretty well prepared. I still have some time to go, but I've enjoyed it. And so I want to say thank you for setting me on that path.
Yeah, man. I mean, by all means, I'm definitely sure this, CMT association is going to gain one big player in the board. So
okay, all right. We'll see, man.
Well done.
Thanks,
yeah, and frankly speaking, yeah, you're welcome. Frankly speaking, if it hadn't been for the virus and the pandemic, I would have already most likely be, CMT2, with the second level of the designation out of the free. It was supposed to be held in June for the entire, this examination period. But of course, because of the pandemic and virus, it was postponed until December. So my plan of getting the full designation this year in 2020 kind of like, turned into ashes. And yeah, so I'm not really, happy with that. Of course, as much unhappy as it can get, when you compare that with overall global catastrophe, that is going on with the COVID and stuff. Like, how is it going, with where you're located, for the COVID, for the pandemic? How does it look like?
Thank you. Schools are we're doing fine, and we've hunkered down, and we were able to be in a place to hunker down and not have to worry about food and stuff like that. And, my wife works, I do my thing, and we've been lucky. A lot of people are hurting, so I want to acknowledge that. Schools are opening now, and to be honest, I don't feel comfortable sending my kid back to school right now until I have more information. I think schools are going to try their best. But I think they're probably just winging it, just like anybody else. They're just humans. They're just people, working their jobs with incomplete information. So hopefully that goes smoothly, and then kind of things can get more back towards normal. But I still feel like we're in for a bumpy ride next couple months, globally, domestically here in the U.S. I think it's going to be turbulent, unfortunately. But I do see kind of some calmer waters after that.
Yeah. Yeah, I'll tell you what. I mean, in Poland, when we compare that situation with Poland, I guess people and media will tell you that it's all kind of like settled already. That many of the there are not many cases just kind of like piling up anymore when you compare that with the statistics back in March and April, let's say. And I 100% understand your concerns regarding sending back schools the kids to school. Although I'm not having my kids yet, right? That's yet to come, all of it. But all that I know is the entire uncertainty level. Let's say the uncertainty regarding the sentiment of people of the entire society against what to do, how to do, is just pretty much what you described. I mean, people are lacking the information and the very basic information that helps them make decisions, right? So every I would say like this entire infrastructure, informative infrastructure, is pretty much not working well, is it?
Yeah, I mean, we could go in a lot of different directions, but I think people don't always get this information from the same places. They don't trust it. There's a kind of whole conversation about that. I think like we just have to see what happens. I think you have to make the best decisions locally for yourself that you can and for your family. I would preach caution, maybe if you can, to be more cautious. Not everyone could be cautious. Like not everyone has the ability to just stay home. Like people have to go work, especially parents with kids. So everyone's in a jam right now, and I don't know how it's going to work out, but I hope it works itself out soon. I mean, it's tough.
Yeah. Yeah, I agree. But are you perhaps aware, like more statistically speaking, are you guys having any sort of like statistics that they feed you with, that they provide you with to make sure that you are staying safe out there regarding this COVID stuff?
Where I live, we're doing pretty well up here in the northeast of the U.S. Different states have had different kind of timing to their curves and whether they flattened and how they flattened and all that. I just maintain that as people are heading back to school, it's post Labor Day, you're going to see another bounce, and you got the flu season coming. I don't know if testing's where it needs to be. It's not a political statement, but for anyone to go get a test they want and get the results within maybe a couple days. Without that, I think if you have to wait a week, what's the point, right? So I think we still have a ways to go, and as people go back to school, it's going to get we're going to see kind of a flare up, unfortunately. Where I am, we're doing okay. But like I said, people are starting to go back to school. So I'd like to get some more information about how that's going to work out.
Yeah, agreed. And, I'm asking because there's just been kind of like a news on my, I mean, not necessarily directly on my end, but on my friends' end, that some of them, for example, because they took down all the limitations in Poland, they kind of like, just make them vanish. They're not really too much, I would say, lockdown at all. Until you're on the quarantine, right? But there, like a couple of my friends, pretty much, again, that I've not really met in weeks, or in months, should I say? They, as far as I know, very recently, have attended some sort of like concerts, like some limited concerts, that like limited capacity, for people attendees. And it turned out after, I guess, 2 weeks, that one of the organizers, for the concert was somehow, suffered from the COVID. And it didn't really, come out for the news until very recently. And, the way that I would say local local administrations of the people aware that the girl, the organizer, had the COVID. They told her pretty much to stay at home for the next couple of days, which means 4 to 5 days of quarantine, right? So on one hand, you are having like 2 weeks of quarantine, as far as I'm concerned, or 10 days because they change it. On the other hand, you're having, somebody who may have literally got, COVID, not only that the test was positive because the tests are said to be not necessarily 100% accurate, by, let's say, detecting COVID itself, but at the same time, some other viruses perhaps. And so all of these things combined, it generates one big mess and misunderstanding because, regulations on one end, the theory on one side. On another side, you're having the practice, which actually administration and government is not necessarily respecting, after they issue that on themselves. So this brings a very messy picture, very messy, very misinformed, very disinformed picture of, again, of many inconsistencies regarding the information, regarding the actual practices. And that, I think, is exactly what brings a lot of emotions to this place, right? To this entire topic, I would say. Because many will tell you that it's a fake. Many will tell you that it's a scam. Many will tell you that it's a hoax. The others will tell you, the society kind of like splits into two. They start battling against one another.
Yeah,
it's crazy.
It's human nature's tribal, unfortunately. I was thinking about this the other day. In America, it's a lot of people, not, maybe half. So you take 25% far right, far left, based on an issue, they will follow the leaders. They don't have any principle. It's whatever their party thinks. Okay, they're going to defend that position. So they automatically go there rather than kind of what's looking right or wrong. And you can't admit that your side was wrong on something. Like, that's not constructive. You have to admit you're wrong to learn and move on, to have compromise. We have a system that rewards tribalism in America. And that's kind of gotten worse over time with how congressional districts are drawn. So then the person who's in that power in that seat just wants to keep that base rather than play it into the middle. We don't have any play to the middle here in the United States. So people are getting their information from different sides. They're tribal about it. You also have a rush to be first rather than to be right. So you get that over time. You have people mistrusting information. Anybody can point to any network and say they were wrong about this, so therefore I'm not listening to anything else. It's really easy to find an example to dismiss pretty much anyone or anything. So, I mean, life's not perfect. You have to accept that. People are error prone. And so you have to kind of look at the totality of what they're giving you, the person or the news site or whatnot. It's a tough time. People, like I said, people are tribal. I think that's the root of the problem, is that too many people are tribal. I frankly can't stand it. That's why I don't watch cable news. I can't stand any of that stuff. I'm not interested in opinion, in talking heads or what someone's opinion is. Like, it's not my style. I can't. When I was younger, I was into it. I'm not there anymore. So that's how I feel about that.
Yeah, and I think what you're saying is very important because especially the point on the tribal nature of people, and it comes out more often than not that this tribal nature activates, and starts engaging even more, on the people's side when they are not lacking this sort of like a basic knowledge. And when they lack the basic knowledge, they would follow the lead of whoever, let's say, seems to have the knowledge in place, right? That's why people tend to follow, like, mindlessly, very often politicians, just as you said, or some, people said to be authorities. But this tribal nature, I think it takes us, to pretty much very, in a very smooth direction, to see how it actually applies to financial markets, because we all know, especially as traders and as technical analysts, as analysts, that this financial market, I would say, tribal nature again is exactly the same. Like, people would follow the herds, people would follow the crowds, like the masses. That's where you come in, with with the FOMO, fear of missing out, or fear of uncertainty, depression, when everybody's selling off. So this is, in my opinion, as far as I'm concerned, this tribal nature principles that are connected with behavioral finance as we talk. And so moving kind of like, along this path, I wanted to ask, like, what your current thoughts are on crypto with regards to all the news, all the recent, novel price action of Bitcoin, of altcoins, of DeFi. Is it a bubble? Like, what are your thoughts on that?
So first of all, that was an excellent segue from tribal politics to tribal economics, and then into crypto. So that was a really nice segue. I mean, I love Bitcoin. Bitcoin's good. It's stronger. It's not in the ideal scenario, having held the 10.5K level on that weekly breakout. So we're past kind of an ideal scenario, but we're still, in a great position. We'll jump into it more later. Plenty of opportunity to cement a higher low, kind of on these, higher time frames. The monthly bull pennant, we're still in a really nice consolidation zone. DeFi is exciting. I don't really know anything about it. I'm not going to explain to you sushi versus yam or any of that stuff, but it's got price action. I'm into it.
And all of a sudden, thousands of people got unsubscribed in here because of the sushi and all these Uniswap badness. It's crazy, man. It's a bubble for sure.
I'm at a point where it's like, where I wonder, do I want to learn what it is or do I not want to know? Because I'm like you, that I assume that the chart has everything. The chart has the most up-to-date information, right? Everything's encompassed, right? That's what we're taught. So do I really need to know if sushi's better than whatever? Maybe. I mean, maybe just to follow Twitter, but it's got price action. I'm into it, right? It's got a market. I'm into it. I put my tweets out. People retweet it. I'm into it. That's kind of how it works.
100%, man. I mean, that's what I think, this entire philosophy of technical analysis is, because it relies on one of the main principles that says that the market discounts everything, right? That you don't necessarily need to search for any other sources of information because everything is impactful enough to print the candles, right? And everything is discounted in the candles. This of course is, you would see many people argue over that. Because as many technical analyst fans there are, you'll find on the opposite edge as many so many pretty much haters for that.
So I think that to a bigger point is that if someone has a system that's working, it's not up to you to tell them it's wrong. It doesn't matter. Like if it works, it works. And like trading is like your style. I mean, you could do Elliott waves, you could do point and figure charts. You could do candlesticks. You could just play bull pennants. You could just play these dead cat bounces. A million ways to do it. If your system works, listen, people watching this, if what you're doing works, don't let anybody tell you it's wrong. Okay? If they can't do what you're doing, that's on them. All right? You do you. So it's not about like, this is definitely what's right. But for me, I believe everything is in the chart because I can believe it is there. I can work with it. It's what has happened. Your chart is predicting X, Y, and Z. Chart's really not about predicting. It's about kind of studying what has happened and maybe identifying a trend ideally, and then kind of playing the trend in a certain way. And it works for me, but for other people, if they disagree, I'm totally cool with that. I just hope it helps them in their strategy. You know what I mean?
Yeah, of course. And I think, there was a lot of truth in what you were saying, especially that I know that many people would actually prefer to spend time chasing others' ideas. I mean, chasing others' strategies, and what works for the other people, instead of finding their own solution, finding their own edge. Which again, more often than not, stems from being lazy. Simply, people are lazy by their nature, right?
Yeah, I think it's okay though. I think in the process of developing your style, it's okay to kind of imitate. Try to emulate rather others. But if you're doing that, keep a journal and a log, how it's going, what you learned, what you didn't learn. Don't just throw your hands up. If you're going to do it, kind of, get something from it.
Yeah, 100%. 100%. But what I meant instead is more that, there are still those people who kind of like want to be spoon-fed, that they want to get served on silver plate, and they would not fucking dare, to just reach out to their book and see what works for them because they're literally too lazy. They're just waiting for the ready solutions, right?
I actually think that's okay. I think you have to have that in a healthy ecosystem, right? You have to have people who buy investment buildings and they want a property manager to run it for them. Then you have to have other people who want to buy it. They want to do the painting, the flipping, they do all of themselves. So in this market, it's okay if people want to buy signal alert services, because without them, maybe you wouldn't have people doing what they're doing. I think it's just part of a healthy ecosystem. Should they learn, try to learn? Absolutely. And are there wonderful resources out there? Absolutely.
Yeah, it's at least, this financial market, principles, they kind of like rely on the overall capitalism, I guess, and those who are better on the market, well, they deserve to be getting the reward after it, right? So as you were saying, it's an entire ecosystem, right, with these people. And I wanted to also touch upon, before we roll over to some screen sharing and charts for our viewers. I wanted to quickly touch upon, some fundamental changes and some different principles of new kinds that you might have noticed in the past couple of months since we last spoke in April regarding the legacy markets. Like, have you seen anything extravagant and extraordinary, on gold, silver, on metals, on equities, be it, penny stocks, or overall, I would say, the dollar index relationship with that, the dollar strength? Like, how would you comment on that?
Well, I think it's been probably let's just acknowledge that since we last spoke in April, when the price was, I don't know, like 5 or 6K maybe. I mean, it's been an amazing run. So I think we have to acknowledge the bull staying power, but that's kind of it's piggybacked along with equities. So we've seen. I mean, I honestly thought there was, if you probably pulled it up, I'm sure I said like it's going lower and doom and gloom, because how can the world shut down and it not have another leg down? And it didn't. So that's humbling. I didn't know what I was talking about. That happens all the time, by the way. And since then, we've just been climbing. So equities have been impressive. And with that, you've had the weakening dollar. You have the inverse relationship. Obviously, the weakening dollar, it's strengthening equity markets, and obviously precious metals as well. And gold, when we have the economic crisis, the Fed comes out, they're talking about printing more dollars, pumping money into the economy, and the inflationary aspect of the dollar. Low interest rates, you're seeing that happen. It's just been steady, and we made the new highs, and it's like you tip your hat to the market. I think a good metaphor people have talked about I probably don't know if I can do it, but the K-shaped recovery, right? Where the people who are at the top, so you have a K-shaped recovery. The money's pumped in, and who writes the bills, right? Who writes the bills that go through Congress? The people in the middle and the top, they get better, and the people at the bottom, they get squeezed more. So that's the K-shaped recovery, not a V-shape, not a L-shape, not a whatever, a BBQ-shaped bottom, but a K-shaped bottom, right? So you're seeing that it's been pumped in, and people are going to put that money? Where are they going? They have to invest it somewhere. It's been going in the market. Gold's been ripping. Now I've seen kind of a cooling off of that. And for maybe the last 6 weeks, I've seen Forex traders, currency traders, others talking about dollar bottoming. And for a while, I'm thinking, where is it? I'm not seeing the strength, because it failed to break 94, and it kept kind of failing to kind of fall through. And the dollar's had kind of, you can call it like a falling bear flag. And we had some indication maybe breaking out of that, maybe. The dollar's so important, so everyone's watching it. But if it was just a chart and we were just talking about a random, penny stock with volume, not just a penny stock, we were talking about a random thing, I'd say, we'd be saying, man, look at this trend, and you have to assume bears are going to continue. We'd be saying you shouldn't be trying to guess a bottom here, and you know what I mean. So a lot of people are putting faith in the dollar that's going to bounce. Perhaps it's based on reasons outside of the chart, because looking at that chart, there's no reason to just assume the thing's going to bounce. Do you see what I'm saying?
Of course I do. Of course I do. And it actually makes me smile a little bit, because the truth is, the way it looks on my end, at least, from my, let's say, commentary point of view in here, it just makes this impression that, especially accounting the overall close to 30% increase in the M2 aggregate, the monetary supply increase over the year since when you compare the same months in 2019 and 20, it would not only mean that the overall dollar strength is way just weaker, I say, and that the same 1,000 backs of 2020 is kind of like way less when you compare that with 2019, and this just, again, I think makes this entire 2020 crash, this entire 2020, I would say, economic situation so so crazy at the rates unseen ever before. Not only, the entire crash was said to be, the sharpest. I mean, the most dramatic, since the actual, 28th. I mean, like 1928, of the the most famous crash. But this entire picture just tells me that, the central banks, the Fed, they will literally do anything, including, limiting down the shorting, closing down, the exchanges just to make people stop shorting. Like, I was watching this live and I was like waking up every single day, and I just look at the chart and I was like scratching my head and what are they doing? How is that even possible? How is that legal? How they are not shitting, just spending time in jail, right? It's literally
market can't go down. They can't let the market go down. That's it. It's just not.
Yeah.
Why, they're running the game. The casino's not going to let themselves go bankrupt for the most part. They're running the game.
That's super crazy, because again, I was actually seeing one of the tweets, I guess, from, of my followers or whoever that was, that that they were saying that if they were the ones to print the money, they would be put in jail. But if the government does it, it's all okay, right? It's all of a sudden everything's good. And that and you have this vision of never-ending bull market, across the charts, and that's the next point that I wanted to touch upon with. And perhaps if you are ready to share your screen with the audience,
Burency is an innovative new cryptocurrency exchange with a focus on transparency, convenience, and regulation. All assets are fully protected and insured against theft and hacks. Start trading today at thebirbnest.com/Burency.
And Chad's brother, I wanted to kind of like touch upon the overall outlook of yours on how it's looking on S&P 500 equities, the index, regarding this entire period since the March's crash. Like, what are your thoughts regarding the new all-time high, and what do you think are the next directions to follow?
So before I even, so here I have the chart in front of me here. We're on a daily chart. Before I even get into that, I'm under the premise that the Fed and kind of those who control the market, they're not going to let this current paradigm change until after the November election. So I think we're not going to have any drastic moves. If anything, we're going to keep going up, but I wouldn't see it, dipping off, because the Fed doesn't want to be seen as maybe putting their finger in the scales, maybe one way or another. So status quo is the safest play. So I think we're going to be in status quo, which means it's a secular bull market. We're in a secular bull market. You have kind of an obviously incredible period of volatility. We were down to whatever, like under 2K or at 2K. The world was falling apart. A lot of people like me didn't think we were going to bounce. And I remember with my buddy at Big Jonas, we were sitting around watching CNBC and everyone was saying, oh, we're nibbling on this and we're nibbling on this today. And we were laughing like, they're not buying anything. These people aren't nibbling on anything. It turned out they were doing it right, and they bought the dip, which kind of goes to a great principle where you want to buy the fear and sell the greed. And people were really buying at a discount. Someone like me was probably expecting some kind of rejection at kind of your all-time high there. It didn't quite happen. You broke through. You didn't have your ideal throwback where you kind of held support there. We're kind of up underneath it, but we're right at it. That kind of brings you to a kind of interesting point where, with diagonals more than horizontals, but with these kind of resistance lines, you want to have a little filter around them. It's not an exact number. You kind of want to have a general sense of that zone. Maybe you kind of make the argument we're kind of still right at it. You haven't quite lost its support, but it's not your ideal kind of your first case scenarios where boom, right bounce off of it and then keep going. We're probably going to be range bound. I don't know. We're going to be range bound. We're above the MA200. You're going to see the rise in MA200. We're going to kind of rise with it probably for the next couple months, is my guess. Like I said, I don't see things changing before the election. After the election, from November to January, it's going to be crazy volatility. Because you're going to have domestic strife. Regardless of who wins, the other side is not going to be happy. They'll probably take to the streets. And then hopefully things will settle down once we've gotten that out of our system here as a country. And so that's kind of hopefully that answers where you think I'm at on the market.
Yeah, I think that's perfectly said. And the truth is that you're exactly sharing my thoughts, Chets. I was thinking exactly the same, that Trump Donald Trump, no matter, again, no matter people like him or not, he's steering the wheel right now. He's at the steering wheel. He tells Fed what to do. The Fed is literally, again, they can print the money out of nowhere, as we already know. They can buy back entire market out of it. They can do whatever the fuck they truly want. And again, with the elections right around the corner, like, correct me if I'm wrong, but isn't it November the 3rd?
November 3rd, but we're not going to know. I believe we're not going to know on election night. You have a lot of mail-in voting. It might take a couple days in some of these states. So it's really more like election week.
Okay.
But it's November 3rd.
Got it. Yeah. Again, so one way or another, the first, let's say, week of November. Until then, I would most likely see the scenario that Trump just pretty much keeps doing what he's been doing, to just sustain the momentum that he's created. And then again, use this, let's say, green charts across, the markets for him, right? Especially the equities, which can be bought back, via corporate bonds or just stocks themselves. And they would just keep this rallying, until the elections at least. And this is going to become, the huge, let's say, quote unquote, edge of his, against other, presidential competitors of Trump. Because he's going to tell you, like, if you watch his tweets, you already know what I'm going to say. But he's going to, I'm the best president. The economy has never been stronger. Like, the charts have never been better. New all-time record highs on every single chart, and so on and so forth. It's like so hilarious to watch this, and I just cannot really stop thinking that he would do really. I don't see him doing anything different to this.
Well, so here's what I think. I really agree with most of what you said, if not all of it. I think, first of all, in my opinion, the market goes up regardless of who's going to win, because corporate interests here in America control both parties. They're going to write legislation, the legislation that gets passed. Look what happened under Obama. You had like a rip your face off stock market rally, and under Trump, you had an excellent continuation of that. So it's going to go up. I don't say that one side or another is going to tank the market, okay? There's going to be instability in the interim for a couple months. But if Biden wins, the market's going to keep going up. Where are the rich people going to put their money, all right? Don't tell me it's going to crash. You're being partisan. It's just not how it works. These people have to put their money somewhere. It's going to go into the market. Any legislation that's written is going to be written by the moneyed interests who control this country. So let's all relax, okay? It's going to be fine. In the interim, okay, now we're gonna have a spike, a Labor Day spike in people going back to school. So you might see a little dip in the market, maybe some more Fed intervention, and by the end of the year, by election time, we're probably at a minimum right at this level. Maybe we do a rectangle right for a while, but we're right here. We're not going to go too much. If we go down, they're gonna help it up. I think we're gonna have another little blip, probably from the delayed Labor Day effects and people going back to school. You might see a little bit of uncertainty, Fed intervention, boom, right back to here.
What you're going to notice in here is that, first of all, this is, again, some sort of like a similar situation. In my opinion, regarding, first of all, these all-time highs that got broken, that technically will tell you that, again, what we're seeing here is bullish, right? The charts will tell you that it's bullish. It doesn't matter pretty much, that the dollar has been the weakest, in years. That the monetary increase, so supply increased so much that, again, it's so unhealthy, and does sort of like rolling and dying inside. They will not tell you because charts are green, right? And that's what's I guess most important to people who are not really, I would say, into healthy economics, let's say. And that, again, is like this unstoppable snowball effect of the inflationary system. And as you said, no matter who truly wins, these elections, the markets in the long term are likely going to, just go up, right? And, this entire, I would say, inflationary bubble of dollar, I mean, there is no way it can ever, I would say, grow unstopped, that it can grow limitlessly, that it can grow infinitely. There's going definitely to be this one time in one point in time, I think, that this bubble is going to explode. And when it's going to explode, terrible things are likely going to happen across all the globe. And I would literally see some military conflicts, some legit big wars and so on. That's going to be definitely terrible. But before again, you're going to notice quite a similarity. I think you agree with me. I'm not a big fan of what people, unconsciously call fractals. What they call fractals, they would expect that whatever you see in the chart, that needs to repeat exactly the same way. While it's actually not true at all. And especially when you could just compare, these both movements, they by structure move somewhat like similar, right? There is this entire resemblance, like it resembles so much one after another, the dips that they happen, to have very similar formula on how they are solved and recovered, right? You see a sharp drop.
Can I add a little? I think I see it in a different context though, because the second one there, what is that? May, June, July. That's right at the bottom of that gap, right? So you're actually below key resistance. The one above it is kind of at and above key resistance. So it's kind of a slightly different context. For my gut is to avoid trying to draw too much of a fractal between those two because the context is so different.
Yeah, I mean, gaps are definitely, just one of the topics that I actually wanted to touch upon later on today. But again, I'm not saying these are fractals. I actually am saying quite opposite. I'm not a big fan of calling everything fractal, because people would call, people would see a pattern, let's say, or a price chart, let's say, fraction, a piece of it, and they would think that the history repeats exactly 100% the same, that you're going to see exactly the same formula, exactly the same candles, in the next, let's say, sequence, which is of course mistaken and wrong. Fractals and chart patterns are fractals, right? Are these structures that kind of like, when you go into the time frames deeper, you're going to notice that these bigger patterns, they consist of smaller patterns, right? So this is the fractal nature, let's say, of trends themselves that consist of smaller trends. Let's say the primary trends of bull markets, they consist of secondary trends, especially if you have, let's say, again, bull market, right? This is going to consist of some secondary trends, right? And these secondary trends are going to consist of tertiary trends of daily fluctuations.
That's almost like Elliott wave theory, right? Where it's the wave within a wave. Yeah.
Exactly. This is the fractal nature and patterns. Again, if there is, let's say, some head and shoulders formula, right, some pattern, you're going to notice that perhaps on every reversal in here, when you go into the lower time frames, you're going to notice, right, that what's inside is, for example, like a double bottom, right? Or again, head and shoulders at the very bottom of head and shoulders, and so on. So knowing that, I'm not taking allegedly and literally these, let's say, structures as fractals. All that I mean is that there is a certain level of of similarity across both of them, right? And I mean more fundamental similarity, which means that I can tell that whatever dip is appearing, that it would be quickly bought up, right? That it would be quickly bought up, most likely with with printed money, right? So and this again, this tells me and kind of like brings me back to agree exactly with what you said. That the markets are going to rally anyway, right? Technically, you're going to see most likely continuation after some short time. If not, then what? Fed is going to just print more money and buy back this anyway, right?
Yeah, that's it. I mean, the money has to go somewhere. That's the name of the game. It's the best game in town. So you might as well play it, right?
Exactly. And I wanted to touch upon, because we've already kind of like covered indices and especially the S&P 500. But all that I mean is, especially when you go to precious metals, gold and silver, I think what's really surprising to me, and I wanted to definitely hear your opinion on that in a second. What's truly inspiring and definitely interesting to me is that more and more as we proceed, when you compare gold, silver, and Bitcoin, you're going to notice kind of like a lot of similarities in the types of movements they make, right? Which, in my opinion, more often than not, tells me that the same sort of like capital makes the same movements across these markets. So again, it means that Bitcoin, in my opinion, is way more mature than it used to be a couple of years ago regarding let's say, the entire infrastructure, the market availabilities, the market's, I would say, allocation of big investors. Because same type of money sits in gold, silver, and Bitcoin. What is your opinion on that?
I mean, I can agree with you and confirm it. I mean, for example, I trade on Bing Bond, and you can trade gold and crypto, and I do some of the copy trading, and some of the copy traders, it's gold, it's crypto. It's a lot of the same money, and a lot of those people are looking at the dollar, and they're seeing the strong dollar, the weak Bitcoin, the weak gold, and they're kind of playing the reverse. So yes, the Bitcoin market is more mature, more institutional money. Yes, easier access to market, right? Less barriers to market. More mature players as well, not just infrastructure, more mature players, more ways to play, all around, all good things, great continued kind of growth. So, you know, you're talking about the gold chart, and the gold chart itself, maybe I'll just take a quick peek at it for fun. I mean, it kind of looks like it's getting close to a pivot, to a decision point here. You have, you know, strong move, right? And you kind of have this steep move as well, right? And when you talk about you know, these flagpoles, like the steeper the flagpole, the more likely you have continuation. So that shows likely continuation. Bollingers are getting tighter. Obviously, you have this tightening range here. A little bit of an equilibrium, right? The lower highs, the higher lows. So you can just eyeballing this. You know, you and I have the muscle memory, Birb. We just look at this. We just kind of see things, right? We don't have to draw them. We see the tightening range. That's going to correspond.
Most classical symmetrical triangle, if you ask me.
Yeah, why not? It's right there. There it is. Boom. And that was, see, look at me. I can't even do what you did. But whatever the dollar is going to do is going to make a big kind of impact here. So we're close to, I mean, if you wanted to play like some kind of like a volatility straddle, this would be a great position for it, where you have kind of a stop loss, maybe a couple standard deviations up or below, and you're playing for kind of a longer swing move. You're kind of in that type of a setup here with gold. So I think gold is close to making a move. You have to assume it's going to be bullish. We're in a bull trend. Hello, right? Since we captured the MA200, we've been rising. We've been crushing these highs, right? Crushing, right? Crush. Strong and bullish. MAs are for the most part fanned upwards, even holding the shorter ones like the MA50, little touch there. Tighter Bollinger Band. I think we are leaning towards breaking back up on the gold, but depends what the dollar does.
Yeah. That's true. I actually, you know, just perhaps a fun note, I bought quite a big deal, you know, of gold and silver in the physical form of metal, of coins, you know, of the bars, back in early July, and I just bought more gold like a couple of days ago.
Nice.
Because I exactly see the symmetrical triangle, which again, just perfectly as you described, you know, there is this strong exponential, I would say, you know, up thrust. After which, you know, again, more often than not, any sort of like continuation or consolidation pattern points out towards the consolidation, towards the continuation, the upside trend, and you know, on top of it, when you switch, you know, for example, to the silver chart, this is going to be exactly the same scenario. So I didn't only manage in time, you know, to buy more silver. But I'm definitely on my way, maybe tomorrow or whenever, to get a bit more silver.
Silver looks even better. Look at that. Silver looks even stronger, right?
It does.
You have an even cleaner triangle. You didn't lose kind of, you know, you're trading closer to the top of that range. So silver, I mean, you're smart. You know, you're doing what you're doing. You're buying an uptrend. You're riding the trend. So looking good, buddy.
Yeah. I think, you know, overall, especially if you take it, you know, and scale it. Let me just actually show it around. What's kind of like, you know, easy to see is, you know, after we hedged this big, you know, crash in 2008 in the real estate bubble, you know, the gold and silver, the prices keep surging, right? The prices kept surging. And, you know, after the bear market, let's say, you know, came into the metals, you know, for gold and silver, gold managed to recover faster, but the truth is that silver itself, you know, it stayed for such a long time, for 7 years in total, inside a consolidation, inside a sideways movement, despite this, you know, overall down spike of covered dump, right? So what, you know, some people, all that I know is some people, let's say when there is a trend line, when the chart, you know, is just moving, when they would see, you know, a tiny spike below, for example, in a fast recovery, they would tell you like, how is this trend line relevant anymore, right? How is it possible that, you know, the trend line is broken, right? It's invalid anymore, dude. Like, what the fuck are you doing even, right? And the truth is that many people would not really, I think, interpret it in the correct way, because trend line, by definition, is a line that shows you the trend, right? And if the trend is up, then it just shows you the direction. It doesn't say that it's going to be like fucking to the single pip and point, respecting that. And more often than not, the trends and supports and resistances, they do have deviations, right? You see a lot of like professional breakouts or, fake outs, bull traps, bear traps, liquidation hunts, and so on. And for some reason, again, majority would sell off exactly because they read in the book that, breaking support is bearish, so that it would sell. And people who are wiser know that the trend is still up, that the small tiny breakdown doesn't invalidate entire bullishness of, let's say, 7-year long accumulation breakout that's just happening here, right? So for silver alone, I would definitely expect, just us go even higher, regarding the levels. I would definitely see us, just going, towards new all-time highs. As long as silver follows gold, right, so well, and with kind of like a delayed format, and gold has just crossed new all-time highs, and silver is way more undervalued, right, then there is, perfect reason for me to buy more silver.
It's almost like people like to trade Litecoin maybe over Bitcoin, because you can maybe get a bigger percentage gain with silver, right?
Yeah, and for the dollar chart, you like me to get one?
Yeah,
yeah,
because
okay.
We're talking about the inverse nature, and I feel like it's at like a really critical kind of a pivot point here.
Yeah, it is. Yeah, and for again for the dollar index, right? Frankly speaking, again, here I'm not necessarily the biggest fan ever of using pure, I would say, non-fundamental technical analysis, if you ask me. I would mainly, I would say, follow the actual, trends, which are represented by, the averages, especially the long-term ones, which is, if this is a monthly chart, then, the black dotted line is going to be 200-month average. The silver is going to be 100-month average, and the 50-month average as the green, as the orange dotted line. And again, you can tell, you can apply some TA and say, okay, we found a local support after a big sell-off, a breaking key, resistant key support of MA50 and local price action, let's say, supports that resulted one way or another with a big sell-off candle. But again, some local support perhaps would more indicate to me that there might be, again, some local pullback, perhaps to retest the broken support, which, based on the polarity change principle, should turn into the resistance right now. But more likely, with the most likely scenario that Trump is going to keep doing what he's been doing and keep, printing money and keep pretty much like, inflating the economy until his elections at least, then more likely than not, in the matter of couple of next months, I think it's more likely to, or years, it's more likely to, just keep this inflationary model intact and on the record, right? And I would see overall decrease over the dollar value against other, currencies such as euro, for example, right? But again, you can argue over the supports and resistances in here, that there is some sort of like a support, there is support, so there you could cluster that supports into the demand zone. But again, overall, I would here mainly watch the fundamental aspects and the economic fluctuations rather than pure TA. Like, what's your take on that, bud?
Yeah, I think that makes a lot of sense. In addition, I feel like we're closer to a pivot, a big change. I'd almost want to look a little bit closer at daily chart, Birb, and kind of, because it looks like we're right there. Yes, we should look outside the charts maybe for news that will affect the dollar, but I think the daily chart's telling us something too.
Yeah. I mean, there's been definitely, especially if we take the annotations here. What we can tell locally, of course, support's broken, right? It was quite well respected because you see there was a tiny pullback right before, but then a strong thrust downside, then breaking for another support instead of like bigger sell-off that intensified on the momentum, again, which you could tell by the momentum getting steeper until it started sort of like losing the steam of the bearishness locally and started more like flagging or just going slightly more into the sideways direction. It's still in downtrend, but it's not powerful anymore, right? It's not as powerful anymore. And then you have, of course, the resistances of hundreds, of 50, and of 200, which more often, in this case, kind of like align well with again, with some clusters, right? As you perfectly said, with the clusters and zones rather than specific levels. So with that in mind, again, I think even if there is some upside potential, there of course might be some upside potential. I would not necessarily see it keeps it surging and pushing upwards like crazy. And instead, I would see further decline. Like, what's your take on that, Chad?
Yeah, so we have what now? We had kind of like a falling bear flag. Now it's what, like a broadening bottom. It's kind of a broadening pattern there in the bottom. And the question is maybe what's the signal going to be that we're going to make that push back up? I think maybe $94. Those last couple highs there in the daily. So I guess if we break up above 94, I think I get even more bearish on the dollar. I'm sorry, bearish on Bitcoin rather. But if we get rejected here, we have a little bit of a rejection, but it's no follow through yet. In the last couple of days. If it does, then Bitcoin, let's go right back up above 10.5. Let's hit that neckline at 11K, and let's see what happens. When we talk about Bitcoin, for me, the big level.
Why don't you throw in a chart? Yeah.
Yeah. Just a little bit here. So I guess just like for me, daily, maybe weekly chart, and really what was I'll take off the Bollinger so it doesn't get too goofy. It's really just that 10.5 level was kind of the ideal level I wanted to see hold. As a general principle, in 10.5 to 10.6, it's not exact, but given how long it took, is you have a really lengthy period of time in between these attempts that adds so much significance to this level. And the more times we've tested it and that the longer it went on, all those things make this such a kind of critical level. So for me, being back below it, it's a bad thing. And as long as we continue to close back below it, I'm going to be a little bit more bearish. Yes, we have a little bit of a tweezer here, but you're in the, you're kind of in the middle of the channel. Like these tweezer bottoms, you want them below the Bollinger Band, lower part of the channel. It's still early in the week, so I'm not really going to jump in on that signal alone. Should we bounce, and we'll go back to maybe daily chart. We talked about how we had kind of a head and shoulders here, and you could talk about maybe like a wide left, narrow right, head and shoulders, 11K neckline base, and your measured move was pretty much that's a fib. Sorry, your measured move was pretty much met. I'm doing this kind of quickly here, but you pretty much met your measured move, right, of the head and shoulders. So I think that's played itself out in terms of the move. But insofar as it's still being important, 11K on a retest, to do that, you have to break through 10.5, maybe even intraday, kind of just to get everyone liquidated. Maybe you break through and kind of get rejected, come back there. I mean, it's shenanigans right now. It is total shenanigans, but you have to, in my view, lean bearish while we're below kind of 10.5K. Yes, we're in some kind of a bear flag. Is it a bear flag? Is it a bear pennant? That's not that as important as identifying that you are in a congestion period following a bear move. So you're in a consolidation zone following a bear move, a steep bear move, which gives you a lean bear bias on which way it's probably going to break. I'll pull the Bollingers back up. Lean bear bias on which way it's probably going to break. You have clusters of support down here. You have a rising MA200, which I think might come into play. Should we drop and hit the MA200, that would still be an excellent higher low for us to continue on. So we're still in a really good shape, but we don't have the ideal support 10.5. So that's kind of what I'm looking for.
And you've shared exactly to the single word what I was planning to say on Bitcoin. So it's kind of like, it wouldn't make sense for me to repeat exactly what you said. I think you described it perfectly. And Chad's brother, I mean, you've been so generous with your time and so amazing with showing off your charts. Before I let you go, I definitely want to leave some final, let's say, spot for you, the spotlight, to share your thoughts on how to build a trading strategy for people who are watching this, who are perhaps struggling with further their own strategy, their own system, what would you say is the golden recipe for that?
I could probably go on for an hour, as I'm sure you could. Number one, only use money you can afford to lose, because if you can do that, or maybe mostly afford to lose, because not everyone wants to lose money, you have to get the emotion out of it. Because when you can or limit the emotion, limiting the emotion allows you to follow through in your plan. Okay, so now it leads me to a plan. You need to have a plan. When you enter a trade, you need to have a thesis, an idea. And my thesis is we're bouncing off the MA 200. My thesis is the MA 5 is crossing the MA 10. Right? And there's a close proximity to price. That's your thesis. And so that's your plan. So then you have your stop loss, and you have to stick with it. So you have to have a plan for your entry, and you have to have a stop loss based on where your trade idea falls apart. The rationale behind your trade idea fails. That's what's important, right? I'm entering because support's holding. Support breaks, you got to get out, man. It's not I'm going to hold because I don't want to put a red in my spreadsheet. I don't want to mark down a red. No, mark the red and then figure out what you learned from it, which leads me to the trading journal. You wrote down why you entered. You wrote down what happened. You have the pluses and minuses in an Excel spreadsheet, and you used money that you could have afforded to lost. Now you do that for about 5 years. You get some experience, right? Or you can start reading trading books. You can read Candlesticks by Steve Nissen. You can read Classical Charting by Schaubacher, by a million other people. You can take the CMT Level 1. You can watch YouTube. Birb and I reach out to us. There's great people to watch. The information's out there, but you have to put in the time. So if you want to do it, put in the time, make the mental commitment, and do it. Trade with a plan, use a stop loss, use a trading journal, and use money you can afford to lose. That's the formula.
Oh, I couldn't have worded up better myself, Jets. Hats off. Amazing quality words to all the viewers and to all the listeners. And that's it, ladies and gentlemen. I'm extremely happy to have been having big Jets on the show today to share all his amazing views and share his talent with you guys. And I definitely want to make sure that you're going right away to his Twitter account at Big Chads to throw in the follow. There's no way you can miss out and not throw in the follow on his profile. Amazing guy. Make sure to check out his My Battles with Cancer. Quite a book in which perhaps Shed, you want to perhaps add a couple words on that of your story, right? Because that's your story.
Well, thank you. And by the way, show Birb some love. He doesn't have to take this time to put together a high quality podcast. These people that you watch and you enjoy, take some time to kind of give them the feedback. That's why they do it. I know from personal experience, people say, I love what you're doing. I'm probably going to do it more. So give that feedback and give him some love. Back in 2017, when I got involved in crypto, I also was diagnosed with cancer. So while I was going through chemo, I was learning about crypto. I was putting out charts, and I took notes of my whole experience, going through cancer, recovering from cancer, taking care of a family member who had cancer, and took about 2 years. And I published that book back in June. And so that's available on Amazon, My Battles with Cancer. And maybe some of you might even be in there if you tweeted at me at the time. So who knows? But yeah, thanks for letting me talk about that.
Yeah, Chats. I mean, by all means, again, I always believed in the people in this space, with the big profiles that have a lot to say. When you have a lot to say, you write a book on that. So definitely well done on that. Congratulations. And I'll make sure to bring it in the description to this podcast. And just as I said, guys, it's everything for today. I truly appreciate it coming and listening. Don't forget to subscribe. Don't forget to put in a comment for me and for Chats. Share your feedback, share your ideas, and let's show some love to amazing person that Big Chats is.
Beaksy is an easy-to-use cryptocurrency exchange. Get verified in minutes. Buy and sell popular cryptocurrencies on a safe, compliant, insured U.S. exchange. Enjoy everything you need in one place. A two-way ramp for major currencies, credit and debit card support, an industry-leading API, responsive customer support, and a 5-star mobile app. Love your primary cryptocurrency exchange? If not, make the switch to Beaksy today. Visit Beaksy by clicking the link in the description.
I'd like to thank our listeners for joining this episode of The Nest Show. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us at thebirbnest.com/discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. This podcast is brought to you by the Birb Nest. Thank you, and trade on.